At Ines Group Berhad, we have built a strong foundation as a Malaysia-based edible bird's nest company. Our subsidiaries Mingfeng and Dynamic Transforms are among the top 10 Malaysian companies exporting raw, cleaned edible bird's nest to China, reinforcing our position as one of the leading market players in Malaysia's edible bird's nest industry. Looking ahead, we are focused on long-term growth and value creation. Our plans include manufacturing bottled bird's nest and other herbal beverages in-house, giving us greater control over quality, product development, and formulation flexibility.
In Malaysia, over the past 4 decades, Hock Soon Poultry Farm has evolved from a humble family business into a leading force in modern agriculture. Today, Hock Soon produces over 1.5 million eggs daily, with operations spanning more than 20 hectares. Every day, freshly laid eggs are transported via conveyor belts into our facility, where they pass through multiple inspection stations. Hock Soon's in-house brand, Q+, has been serving the nation for over a decade. The range includes omega, selenium, vitamin E-enriched eggs, and jumbo-sized eggs. Hock Soon Poultry Farm, nurturing quality from farm to table.
What would happen? Machines run. Operation stopped. Tables are dirty. Business halted. Store closed. Staff gone. What if you had Manforce Group? With Manforce Group, every step is handled, every risk is managed, every regulation met, from permits to paychecks, ensuring legal, fair, and quota compliant start. Partner with Manforce Group right from the start. Powered by Manforce Group Berhad.
Where creativity meets strategy, and where brands are built on innovation and insight. We provide a complete 360-degree marketing and sales solution, creating real-world exposure through business events, awards, and networking platforms. We then strengthen online presence through digital content, media exposure, and performance marketing. To reinforce awareness, we extend the message offline through billboards, banners, and digital out-of-home media.
KleverStock is a content-driven financial media and investor insights platform. We integrate live stream coverage, educational content, market data visualization, and AI-powered tools to support investor understanding and engagement. In the past year, we achieved significant momentum across our operations and market visibility. We delivered nearly 99% of all IPO and listing day live stream coverage, featuring executive interviews, ceremony broadcasting, and real-time market updates. We collaborated with major corporates including Foodie, Aquawalk, and many others. We also expanded partnerships with investor relations firms, trading platforms, and marketing agencies. KleverStock is now ISO certified, and our official media accreditation has been renewed, enhancing governance, access, and professional credibility. Our content performance continues to grow rapidly. We achieved over 10 million impressions across social platforms, 1.2 million unique visitors in 2025, and more than 630,000 live stream views driven by our IPO and market coverage. These results reinforce our growing influence and visibility across the financial community. We advanced our technology with Phase 2 of our AI engine, enabling smarter sentiment tracking, automated summaries, and improved market screening. Our priorities for 2025 include strengthening strategic partnerships, enhancing our IPO and corporate livestream capabilities, expanding content production, and accelerating AI-powered investor tools. We remain focused on innovation, consistency, and delivering market-relevant insights. KleverStock remains committed to growth, technology advancement, and delivering meaningful impact to our clients, partners, and audiences.
In a world powered by data, Electricity is not optional, it is foundational. Every transaction, every connection, every system depends on it. Electricity sustains industries, enables digital ecosystems, and underpins modern life. Economic growth depends on stable infrastructure. Digital expansion depends on reliable power. EI power strengthens the systems that sustain both. We engineer certainty in environments where certainty is required. EI Power Berhad, powering tomorrow.
HSS Holdings Berhad, where we transform the finest bakery products into accessible delights for everyone. We combine premium quality with affordability, driving product innovation and leveraging our extensive distribution network to reach more markets, mini market, supermarket, and hypermarket. From HSS to LHMC and Kasaga, our commitment to quality, innovation, and customer satisfaction drives us forward. Join us in bringing incredible bakery products to the world. HSS, your trusted partner in bakery excellence.
Go!
Rest and go.
SRO. SRO, so you have a range clear launch.
And CDI.
Half of the case, processing and launch.
At Ines Group Berhad, we have built a strong foundation as a Malaysia-based edible bird's nest company. Our subsidiaries Mingfeng and Dynamic Transforms are among the top 10 Malaysian companies exporting raw, cleaned edible bird's nests to China, reinforcing our position as one of the leading market players in Malaysia's edible bird's nest industry. Looking ahead, we are focused on long-term growth and value creation. Our plans include manufacturing bottled bird's nest and other herbal beverages in-house, giving us greater control over quality, product development, and formulation flexibility.
In Malaysia, over the past 4 decades, Hoksoon Poultry Farm has evolved from a humble family business into a leading force in modern agriculture. Today, Hoksoon produces over 1.5 million eggs daily, with operations spanning more than 20 hectares. Every day, freshly laid eggs are transported via conveyor belts into our facility, where they pass through multiple inspection stations. Hoksoon's in-house brand, Q+, has been serving the nation for over a decade. The range includes omega, selenium, vitamin E-enriched eggs, and jumbo-sized eggs. Hoksoon Poultry Farm, nurturing quality from farm to table.
What would happen? Machines run. Operation stopped. Tables are dirty. Business halted. Store closed. Staff gone. What if you had Manforce Group? With Manforce Group, every step is handled. Every risk is managed. Every regulation
Good afternoon, investors. You are now on KleverStock with me, Madhvi, and I'll be serving you the midday roundup with the latest market updates from this morning up until now. And opening today's market wrap with a look at domestic front, Malaysian blue chip stocks opened higher on Thursday, taking cues from Wall Street's overnight rally after the US government announced plans to buy back a long-term treasuries to support market liquidity. The benchmark FBMKLCI rose 4.05 points to 1,735.37 shortly after the opening, largely driven by gains in YTL Group counters. Demand surged following an announcement that YTL Power International Berhad had formed a strategic partnership with IJ Land Group to develop the gigawatt-scale data center campus at Sedena Tech Park West in Johor. Consequently, YTL Power climbed 32 cent to 5 ringgit 20 cent, while YTL Corp advanced 18 cent to 2 ringgit 40 cent. Buying interest also extended into plantation and Petronas linked stocks, as Digatri added 8 cent to 6 ringgit 62 cent, IOI Corporation rose 3 cent to 4 ringgit 58 cent, and MISC gained 11 cent to 6 ringgit 17 cent. Conversely, Petronas Chemicals dipped 8 cent to 4 ringgit 61 cent, pairing recent gains locked after a quarterly earnings announcement. Meanwhile, CBH Engineering emerged as the most actively traded stock, surging 8 cent to 87 cent. The rally followed its announcement of securing a 246 million ringgit contract for a data center project in Johor. The overall improvement in trading sentiment, boosted by declining U.S. Treasury yields, occurred despite elevated energy prices driven by Middle Eastern geopolitical tensions. Brent crude futures for October delivery surpassed $92 a barrel, reaching a 4-week high after U.S. President Donald Trump stated there were no plans to resume negotiations with Iran. Looking ahead, market sentiment could face headwinds from overseas monetary policy concerns. The latest Federal Open Market Committee meeting minutes revealed persistent worries over inflation. Although the U.S. Federal Reserve maintained interest rates at its last meeting, with 3 policymakers dissenting in favor of a quarter-point hike, a larger group of committee members signaled that further policy tightening would be required if inflation fails to cool. Moving on to our local currency and foreign exchange. The Malaysian ringgit advanced against the US dollar in early trading on Thursday, driven by mounting anxieties over expanding US government debt, which weakened the greenback and dampened prospects for a US interest rate increase. By 8 a.m., the ringgit had appreciated to 4.0455 or 4.0540 against the greenback, making gains from Wednesday's closing level of 4.0565 or 4.0610. Addressing the shifts in the foreign exchange market, Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzal Isam highlighted the heightened scrutiny over Washington's fiscal health influenced market sentiment, pointing out that U.S. government debt is currently in the spotlight, with public debt outstanding having crossed $40 trillion, surging by a third in less than 5 years. He further observed that this happened at a time when the U.S. Treasury Department attempted to bring down long-term yields via direct intervention in the bond market. The chief economist noted that a near-term rate hike by the U.S. Federal Reserve could exacerbate the situation, cautioning that it could further undermine the U.S. government's ability to repay its debt obligations. Reflecting these fiscal pressures, the US dollar index dropped 0.86% to 98.798 points as markets participation downgraded the likelihood of a September rate hike. Muhammad Afzal Isam viewed this development favorably for the domestic currency, stating this is seen to be ringgit positive as the interest rate differentials between the Fed funds rate and the overnight policy rate will remain steady. He projected the ringgit to navigate between 4.04 and 4.06 against the greenback throughout the session. Despite its strength against the dollar, the local currency experienced a softer opening across major global currencies, weakening against the Japanese yen to 2.5562 or 2.5616, the British pound to 5.5023 or 5.5138, and the euro to 4.7231 or 4.7330. Performance across regional Asian markets remained mixed, with the ringgit dropping against the Singapore dollar to 3.1819 or 3.1891 and the Thai baht to 12.3046 or 12.3372, while making positive strides against Indonesian rupiah to 226.7 or 227.3 and the Philippine peso to 6.54 or 6.56. Now for some economic news. BMI, a Fitch Solutions research firm, has raised its 2026 average price forecast for Bursa Malaysia crude palm oil futures to 4,453 ringgit per ton, up from its previous projection of 4,300 ringgit. This revision represents a 4.1% increase compared to the 2025 average of 4,279 ringgit per ton. Prices are expected to trend steadily upward through the end of the year, averaging 4,550 ringgit per ton in the third quarter and 4,582 ringgit per ton in the fourth. The driver behind this higher price outlook is tightening global supply-demand balance for the 2026-2027 season. Global production remains largely stagnant, primarily suppressed by an expected 3.5% drop in Malaysian output to 90.5 million ringgit tons. At the same time, global consumption is projected to expand by 2.7%. This demand growth is heavily driven by Indonesia's expanding domestic biodiesel program, which is absorbing significant volumes of palm oil for local fuel production and reducing supplies available for international export. Despite production headwinds supporting higher global prices, substantial inventory cushions will prevent runaway price spikes. Malaysia's CPO stockpile stood at 1.4 million tons in July, providing a buffer that helps temper extreme upside pressure. Additionally, Malaysia's domestic efforts to increase its biodiesel blend mandate to 15%, B15, are moving gradually, with a 12% target considered more realistic for 2026. Because this shift adds only 200,000 to 270,000 tons to annual domestic demand, it functions as a modest tailwind rather than a major market disruptor. We'll now take a short break, but don't go away. We'll return shortly with corporate news and developments. Welcome back to the Midday Roundup. Let's continue with some corporate updates. Infomina Berhad is expanding its enterprise technology footprint after securing a 51% majority stake in Blue Fortress Sdn Berhad for a total consideration of 25.5 million ringgit. In a filing with Bursa Malaysia, the company stated that the acquisition was executed through its wholly owned subsidiary, Infomina Services Sdn Berhad. The equity stake was bought from vendors Liu Shu Ern Huang, Siu Nga, Peter Shu, and Tan Min Choi Yap Sin Ho. Blue Fortress specializes in computer software provision, IT consultancy, project management, and information security related products and services. Highlighting the target company's market footprint, Infomina noted that BFSB has established strong customer base across the financial services sector, serving major commercial banks in Malaysia, as well as large enterprises and government agencies. The company emphasized that the transaction directly fits into its growth map and explaining the acquisition aligns with the company's broader strategy of expanding its enterprise technology ecosystem by adding specialized cybersecurity and digital trust capacity and the capabilities to complement its existing strengths in mission-critical infrastructure, digital transformation, data, and artificial intelligence-enabled solutions. Management expressed optimism over the strategic initiative's financial impact on the group, adding that barring any unforeseen circumstances, the board is of the view and the acquisition is expected to contribute positively to the financial performance of the group in the future. Up next, we have commodities updates. Oil prices jumped to a 4-week high on Wednesday as rising Middle East tensions strengthened global supply. Brent crude rose 0.7% to $91.62 a barrel, with U.S. West Texas Intermediate gained 1.1% to $85.83. The price surge comes after the UAE suspended all financial ties with Iran following recent missile attacks and as ship traffic through the critical Strait of Hormuz slowed to nearly half its usual volume. Diplomatic relations worsened further as Iran announced a fully offensive military stance after a temporary ceasefire expired without talks. Analysts warned that continued escalation could push Brent crude back into the triple-digit territory. Supply was further constrained by a 15% drop in Russian oil exports due to disruptions at the major Black Sea port alongside ongoing Ukraine attacks on Russian refineries. However, price gains were slightly capped in the US, where crude inventories increased by 4.4 million barrels last week. And moving on to today's major corporate developments and the deals across Malaysia. Sarawak Consolidated Industries Berhad has secured a 21 million ringgit subcontract from Bilion Juta Sdn Berhad to undertake upgrading works that 4 students hostel block at Institute Pendidikan Guru campus Keningau in Keningau, Sabah. Infomina Berhad wholly owned subsidiary Infomina Services Sdn Berhad is acquiring a 51% stake in Blue Fortress Sdn Berhad for 25.5 million ringgit from Liu Shu Ern Huang, Siu Nga, Tan Chin Moy, and Yap Sin Ho. SRKK Berhad has entered into 5 sale and purchase agreements to acquire 5 office units in Klang, Selangor for 1.6 million ringgit from Zongli Fishery Sdn Berhad, Lim Chai Leng, Chua Yok Wan, Lim Kien Seng, and Lim Bun Kien. Bintai Kinden Corp Berhad's wholly owned subsidiary Kejuruteraan Bindai Kinden Co. Sdn Berhad has received a letter of award following an open tender conducted by Plus Malaysia Berhad for 2 parcels of leasehold land measuring approximately 103 acres in Ayakura, Melaka. BM Greentech Berhad's wholly owned subsidiary Boiler Mac Sdn Berhad has owned a MOU with QR Nutri-Food Sdn Berhad and Simbonia Power Sdn Berhad to cooperate through a special purpose vehicle. YTL Power International Berhad, through its unit SIPP Power Sdn Berhad, is partnering with J-Land Group to develop a gigawatt-scale data center campus at Sedena Tech Park West, Johor. Bascat Berhad has signed a MOU with BYD Malaysia Sdn Berhad in Shenzhen, China, to jointly advance a Malaysia-based new energy commercial vehicle platform. And that's a wrap for Midday Roundup with me, Madhvi on KleverStock. Thank you for choosing us, investors. Stay tuned for upcoming live stream programs.